I like how you whoop, whoop.
What is going on YouTube? It's Brendan from Market Makers. Guys, what an amazing video I have for you today. Taking the .com pattern, my pivot pattern, to another level of confluence. You're going to love this video. Please do take a moment, like and subscribe. Leave me a comment. I try to get back to as many as possible. Some of these videos get hundreds of comments. So you can always join our room if you want to talk to me directly, talk to the other staff, talk to the members in the Discord. All that information is pinned in the YouTube comment section as well as in the video description. Guys, you can join our room for free. If you want to trade these markets, check out one of our two fantastic sponsors, SimpleFX, decentralized FX exchange, where you can trade everything with just an email and stablecoin, okay? All of the equities, all the commodities, all the Forex, as well as individual assets, and of course, cryptos. And BingX, if you want a traditional crypto exchange, all those details are in the video description and YouTube comments. And you can message Lee in the Telegram if you have any questions about the exchanges or any difficulty joining the room, because these vendors are paying for you to join our room for free for a month. So take advantage of that offer and try out the platform and message Lee. All right, guys, let's talk about what's going on in the pattern. Markets are rallying. I know everybody's like, the bears are like super surprised the market's rallying. Why is the market? I was listening to CNBC and just some YouTubers are like, oh, this doesn't make any sense. The market's moving at this pivot pattern. If you guys didn't see my last video, I'm going to tag it at the end of this video. Watch that video if you're not familiar with the pivot pattern, if you're not familiar with the boom bust cycle, because we are going over new material today, okay? So let's look at this. So we have our pivots that have been playing out. And again, we covered this yesterday, but key concept to understand, guys, the exact bottom, 43-day pivot, the exact top, the exact bottom, the exact top. Within $20 of the exact top, we wave down because it's a pivot. Spring equinox, red alert signal. Over here was your fall equinox, red alert signal, gave you the bottom within a week or two after. Spring equinox should give you the top a week or two after, which lines up beautifully with our April 14th pivot date. But that's not where this confluence starts or stops, guys. You have to understand, remember, in the last video we talked about we're trading exactly like last year's pattern. Last year's growth and decay pattern rallied up into April, okay? March 30th, we made a top, sold off 20%. This started our 43-day pivot pattern here in Wyckoff accumulation. And of course, we had the spring equinox saying red alert, trend change is coming. You're in an uptrend, you pivot back to the downside. So that is last year's growth and decay cycle. But going back, and I've showed you guys this for weeks on this on my channel. Nobody else is talking about this. And if you look at this, the trend line, this is Y2K. This is an E-mini, okay, weekly time frame. Y2K on the left, and on the right, you have the modern market. This is a trend line from the all-time high. Rallied up 9 bars 63 days to test the trend line. Rallied up 9 bars 63 days to test the trend line. And then your big rally that broke the trend line to allow you to pivot back to it, to back test it for support. 16 bars, 112 days in Y2K. 16 bars, 112 days in the modern market. But guys, it's better because look at this. You see the spring equinox. This was the top in Y2K, literally on that weekly candle. Sold off, went down to the next level. We had our red alert spring equinox last candle, but look what we did. Some key concepts to understand. I'm going to take this to the next level for you. You guys are going to love this. So we have our top and then we have our co-equal high. You see that for the double top. I'm going to draw it so you can see it, okay? If you're not familiar with these shapes, there's your double top, broke the neckline right here, shoots you down. We broke out here. Here's your first top, coming back. We back tested it, and now you're coming up for your second top. Again, I've been telling you for weeks, if we complete the .com pattern, you're looking at a co-equal high. You can see the candle here moving up to it. But guys, Watch this. This is what's really interesting and fascinating as a pattern trader. Let's go ahead and get rid of the spring equinox so you can see this. So April 14th, let's go back and verify. April 14th is our pivot. Our next pivot, April 14th, before we make a top and sell off to a June bottom, just like last year. But look at this. So April 14th, let's go ahead and draw this out here. These are weekly candles. It's going to be on the April 10th candle. Change this color to gold so you can see a little bit better. There you go. So this is our pivot candle, okay? On the 43-day pivot. So you have the exact same rally patterns, the exact same pattern to break out and move up, the exact same pattern to break out, back test your trend line from the all-time high, move up as support. Watch this, guys. So your first top, you see your first top in Y2K, where you made your top before you pivot it down to back test support, all the way out to where the market broke down, 10 bars, 70 days. Let me flip this up so you can see it to the upside. Up here, 10 bars, 70 days, okay? Now look at this. Your first top, where's the pivot date? 10 bars, 70 days. The April 14th pivot on our 43-day pivots, 20 years later, is the exact same pattern as the double top pattern from .com. Do you see that? The exact same rally pattern, the exact same bar count, top to top, okay? Top to top. This is supposed to be where we get our pivot. That's at 10 bars, 70 days. So you have 9 bars, 63-day rally, 16 bars, 112-day rally, 10 bars, 70 days between tops. The exact same pattern repeated in the modern market 20 years later. Why? Because bubbles are patterns. There's patterns of decay. The pattern of growth and decay is one and the same, as Plato said. You're repeating the exact same pattern. If this pivot holds true, which all of the other pivots have held true going back to June of 2022. If this pivot holds true, you're making a top and you're changing levels to the bar. I can't stress that enough. To the bar. You're not going to get this on any other channel, guys. This is absolutely amazing if this plays out. And where's this going? We're going to look at the price targets for where this is going. Here's our daily time frame, 45-degree angle, pumping up the co-equal high. If it were to complete the exact same target, the exact same pattern, the exact same bar count as Y2K, then this to me looks like you're coming back up to 41.43, maybe up to 41.73, 41.80. Obviously, you have a wick up here to almost 4,200. So between 41.43 and 4,200, if you're going to make the exact same pattern. And guys, this is really crucial to understand. Why are we talking about the S&P? Some of you are here to watch Bitcoin. We're talking about the S&P because this is the largest market, $34-35 trillion market. The other markets, even the international markets, which we're going to cover as well, the DAX, the CAC, all of them will follow the S&P almost to the candle when you overlay them, okay? So you look at this and look at the volume, the strong volume. I'm going to show you this pattern that we have right here, a geometric Gartley pattern. You have the strong volume for your sell-off, and then you have the weaker volume. Look at the volume down left to right, especially these last few candles on this big uptick. Look how well below average these candles are. This is indicative of fewer participants paying higher prices. It's volume divergence, okay? So to me, this means you're going to be making a top. You look at money flow going into the asset on the daily time frame, it is still in the bearish area. You look at your volume ratio. Both of these are market maker indicators, guys. You get these for free. We have a half dozen indicators custom programmed for us by Fractal Trade 15 that you get for free when you join our room for free. This is the day of free. I'm giving you a massive trade setup. I hope you understand that. A massive trade setup, free indicators, free room. So just check out our sponsors and come join us, guys. So let's look at this again. So you have bearish volume, okay? Volume down left to right. This is how you make tops and patterns. Where's that top coming? 41.43 to 4,200 if we're going to make the exact same co-equal high that we did in the Y2K bust. Okay, you see that? Your exact same co-equal high. This is what we're doing on the E-mini, pumping right back up to where we were to the exact same bar count. So that's fantastic. And next week, I think what we're going to see, by the way, you have this uptrend. So because if we're going to make a top here, at some point it's going to come up here, could be early next week. It's going to come up here or it could start failing. It doesn't have to be a co-equal high, just keep that in mind. But you're going to see some retracement at some point because this is a lot of buying, a lot of strong surge up, but look at your volume down left to right. So people are saying this is algorithms manipulating the market. I saw, go ahead and throw up that Michael Burry tweet, Lee. So if you look at this tweet, Michael Burry showing the buy the dip mentality. I don't know if you're familiar with the BTFD crowd, but that is buy the effing dip. Okay, this is almost like a Reddit movement, kind of like Wall Street bets and how they were running up AMC and GameStop and all that. But this is the largest inflows. This generation of young traders, the largest inflows of the buy the dip mentality, and that, in my opinion, is why you're seeing such low volume and prices rising. And when prices get to a certain level, this is how money moves through the market. When prices get to a certain level, the big algos, the big markets, the big houses, or the big markets, the big financiers, they're going to dump on you. Okay. They're going to dump on you. And that's why this pivot pattern plays out exactly as it has since June. Does it have to play out? No, it doesn't have to do anything. But again, the precise movements in the market for these big swings, even if it just plays out for a swing down and then we rally back up to a new all time high because everything I said is wrong, everything I believe is wrong, this pivot should still play out if it holds true here and give you a tradable move. Okay. And this, in my opinion, will be a big move. And we'll know when we get to this pivot because the next couple of candles should set you up for your next down move. Okay. So let's go ahead and move forward and cover the other topics here. I want to show you guys a key concept here. I know a lot of you don't trade the DAX. This is the German 40. We have a lot of Europeans that watch. Germany by itself is the third largest economy. If you lay over the Dow, if you lay over the S&P, moves almost candle for candle with it. Key concept, reason I like trading the DAX, Y2K, the DAX went down 74%. Now, people ask me all the time, how can these patterns play out, right? With the manipulation, with the modern day apps for trading and stuff, and modern day media, how do these patterns still play out just like they did historically? That's because depending what you believe, natural law trading, which many of you believe in aspects of natural law trading, meaning the market is a living, breathing organism, as Charles Dow said, as W.D. Gann said, as Richard Wyckoff believed, the market moves in patterns. This is why Charles Dow compared it to the ocean, the waves. You have the tide as your trend, the waves of price, and then you have the ripples or the intraday movements in price. And then you have the law of three. Gann wrote about the law of three extensively. Law of three, we have it all over the marketplace. Three candlestick reversals, head and shoulder patterns, most importantly, ABC corrections. Gann hit a pattern in one of his books, which is a law of three pattern based on three impulse waves, essentially an ABC correction. He didn't call it that. This is over 100 years ago, but that's what it would be considered in modern day. I wanted to show you guys something because I found this. So this is such a clear example. I've showed people this on Bitcoin as well. Now, this is the weekly time frame on the DAX. Okay. Now, this isn't going to capture every single movement. I know you Elliott wave traders, you like having these sub waves and waves. I'm talking about the gross movements in the market, law of three, Gann's market pattern. Okay. Here's your first wave, your second wave, and then here would be your third wave, wherever this comes up to, if it's pumping up a little bit higher. But for right now, that's your top. Okay. So that's your three impulse waves here on the DAX on the weekly time frame, which sets you up for the next three waves, which are then your correction waves. Okay. So again, in a bear market, three phases to the bear market, three phases to the bull market, Dow theory, guys. In a bear market, we would be coming down, I believe, here to the one fib, maybe get a rally up. We don't know where this will be yet. We don't have candles. This is for demonstration purposes. And then your next level down, again, tying this to Fibonacci because Fibonacci is part of natural law trading. And this is how you get your Gann marketplace pattern. So this is my Fibonacci 8701 on the DAX back down to your pandemic lows. And if you go deeper than that, because again, the DAX went down 74% in Y2K. And as of right now, this is still your all-time high. This is only a 46% retracement, and as you know, if the S&P hits its target of 50% or more, as it has in every single bubble cycle, the DAX is going deeper, okay? So this would be a 57% retracement down to 7,000. But I want to share this with you because it's such a clear-cut example of the law of three pattern. Now, let's go ahead and take this off. Show you some, well, actually, I'll just show you this with the trend-based fib. So understanding trend-based fib as well is very important. We have our impulse out of here, okay? Our impulse out from the pandemic. I keep forgetting I can't say that word. From the pandemic low, okay? And we come up to this top and we come down. And this is where I'm looking at here. If you look at the fibs, how they're set up here, guys, you have your 786 at 15.4, 15.541, okay? You have your 786 here. So this is really key to watch as well. You can see that these fibs have been respected here. You can put on your 886. Actually, I think I drew this on the next chart. Yeah, I did. So this is, I already did this here on the daily time frame. So here's your 786. This is where price is right now on the DAX. Now, the DAX, again, really interesting because of how it moves. And if you zoom this thing out, what are you really making here? And that law of three pattern, you're making a massive double top, okay? So if I show you that again on the weekly, look at the A, the B to C. This is a massive double top. Regardless if this pumps up more, you're making a massive double top. When that neckline breaks at 11,901, you will have your movement down, okay? And this is going to be your price movement. So this is just a really key concept to understand. And when I'm looking at this on the DAX again, you can see we're pumping up a little bit, trying to defeat this. DAX, low volume. Let's look at our money flow and everything. Our volume ratio is still negative, low volume rally, but again, it's mimicking what the US markets do. So I like the DAX up here at 15,653. It can go a little bit higher. Obviously, you have this next band of the 886 at 16,203, but I like the DAX up here once you start seeing the resistance come into play as you move closer to your April 14th pivot. This is not the DAX pivot, but it moves almost candle for bases and for sell-offs with the S&P. So I went ahead and threw this on here for reference as well. Let's go ahead and move forward. That's where I like the DAX. I want to show you some Wyckoff concepts. So on the French 40 to CAC, all of this is tradable on SimpleFX. Look at this beautiful Wyckoff. Here's your all-time high. Now the French 40 defeated its all-time high on this rebound, okay? The DAX went up 104%. The S&P went up 121%, both from their pandemic lows. The French 40 came down and actually defeated its all-time high here, sold off with the bank disasters, and now you're bouncing back up. Now, in a bullish scenario, right? If you didn't know what was going on in the macro environment, if you didn't know about the economy slowing around the world, if you didn't know that German core inflation just went up, if you didn't know any of this information and understand the conflicts and everything going on, you could look at this in a Wyckoff perspective, and I'm sure many people do. You broke out of your Wyckoff. We talk about this all the time. Your Livermore pivot. There's your pullback, right? And now this pivot would need to accelerate to defeat this pullback, and that's your upside. That would be a new bull market and the CAC, okay? If you can defeat this and just keep shooting up, do I think it's going to do that? No, I think it's going to top out because the S&P is getting very close to its target, 50, 70, $80 away. I don't know at the time of this recording, but it's getting very close to its target, I think, where it's going to have some strong resistance and possibly some retracement next week. So you're above your 200. Let's go ahead and lay this out as well here on the CAC. Do a fib on here. Daily time frame. I'm going to use this impulse out here because as you can see, you had a multi-level accumulation event for you impulsed out of here. Come up to this top. I'm doing this quick, so it might not be the exact candle, guys, but just to show you this. Come on, give me a base. Right there. All right. This is trackball mouse issues. You gotta really, there you go. All right, but look at how beautiful it's laid out. Okay, again, understanding Fibonacci waves. A lot of people ask me who to read about this stuff. Read Robert Fisher, the new Fibonacci trader, wrote that book, I don't know, late 90s. Early 2000s. You can't find it anywhere anymore. You have to find it in one of those used bookstores. Fantastic book, guys. Very complex. And read Fibonacci Analysis by Constance Brown. She wrote that in 2008. the GFC. But this is the concept of impulse moves and fib waves, okay? And if you look at this, the 1618, you hit it beautifully, sold off. Where are you getting resistance at on this rebound up? And potentially, as soon as you come back up in the CAC, the 1618, 73.64 is where I like the CAC. Could get some wicks above it, so you can zoom into smaller time frames and use your own methodology for that. But this is a key area to watch, and you're at 73.26, 73.64. And again, you can trade this stuff on SimpleFX. Check that out. Let's go ahead and look at BTC. BTC, okay, on the weekly time frame, exact same thing. So I'm not going to draw this. Well, I guess I'll go ahead and draw it because people say, well, why didn't you draw the pattern? I used to draw this all the time. Longtime subs know on this channel the GAN market pattern. Go ahead and draw that up. And then we'll just go ahead and use the XYZ wave. You could draw this a couple different ways. You could say, because this is a massive 50+% rally, that was your wave down. But we're just going to do this for gross movements, guys. Go ahead and grab that. And wherever this rally, if it stops here, and then your next rally, remember, you're getting a double FOMO rally in Bitcoin. And I have that price right about, what, is it 12.8, 13K? So let's just say 1375. So that would look something like that. Now you could actually draw this again and have your wave here, your wave down, and then your wave down. But Bitcoin is going to get, because it's so parabolic, you're going to get this double FOMO rally, I believe. And then you'll set up your next set of waves, right? So wherever you bounce off of, 12.8, 13.5, whatever, you bounce back up, you hit a level, you come back down, you're going to end at this gust. So with Bitcoin, you get that extra 3 waves the way I drew it here, and it would look something like this. And again, we don't have candles here, guys, okay, but this is that bottom that I was predicting for that first bottom. Then you'll have a rally up, then you come down to your what is this, the 46, this will be that 4 to 8K range that we're talking about, 4600 to 8K. So let's just meet you guys, we'll meet in the middle, right? Let's go ahead and meet at like 6500. You'll have that rally up. From that, wherever that's going to go, let's just say 12K, okay? And then back down again. And this is how you would get that double bottom, by the way, in the marketplace, okay? So you can see how the patterns would play out. You make your bottom in the discuss phase, you rally up, which means you're then selling back off. If you can hold that bottom, get a higher low, now you have a double bottom structure, and you can go back up to the upside. And this isn't going to happen like this, by the way, because if everything comes to fruition, I think Bitcoin's very parabolic, so you'll have a nice trading range in Bitcoin, okay? But things take a long time to recover, especially if the bubble really collapses the marketplace. So be aware of that. You can, I mean, in 1969, before the 72, 73 crash, the Dow made a high. It didn't defeat that high until 1982. Okay, we saw this with .com. You barely defeated your high after the .com bubble. I think you beat it by $12. We went over that in a previous video for the '08 bubble. Okay, so you had to wait 7 years to defeat your all-time high, and you only defeated it by $12. This is why it's so dangerous to watch people that don't understand market movements, because how many people bought in up here, and you could be the whole decade until you get back here. Despite the fact that you see 90K Bitcoin videos incoming, million Bitcoin videos incoming this summer, people who are, you know, supposedly professional traders talking about 500K this year, they don't understand market patterns or market cycles. Very, very key concept, guys. Let's go ahead and look at Bitcoin on the daily. You got some wicks up and down. You know, again, you're stuck here around that range of the 27.8 up to this 31K range that I have here on the 2058. And right now, again, you're making stacking candles side by side. You had an impulse up, got sold back off. If the S&P hits its pivot, retraces, and then goes back up again, that is when you could see more moves up to the upside in Bitcoin. But if the S&P on April 14th, like I think it's going to, suffers and really starts to fall apart, you're going to see everything move down with it. Okay, so how parabolic, how much more movement can this get? The fact that it's still sitting here and the Nasdaq's moving up, the S&P's moving up, you could see a late move impulse by Bitcoin and come up to that 31 area, or you could just sit here because it's already baked in. All right, so as you approach that pivot date for the broader market, that's when I'm really watching what happens in this marketplace. And let's look at our indicators here. Money flow is bearish or about to turn to the bearish side. You still have decent volume. You know, crypto trades on centralized exchanges for the large part, so you're going to have decent volume. On the 8-hour time frame, We talked about this holding your Wyckoff base, which we did. We waved up, lost it, went down again to test the neckline since my last video. Tried to get above. You see what you tried to do here? You tried to base above on top of your Wyckoff, just like the CAC did, right? You're trying to base on top of your Wyckoff and move up, but you sold off. You couldn't hold it, and now you're trying to hold it again. But again, you always just have to look at these shapes. This is a smaller time frame. It's 8 hours. I know some of you guys go. We got guys that go down to like the 5 minutes, but this is a double top, right? So it doesn't want to draw for whatever reason, but you can see this is a double top. Here's your first top, there's your neckline, back up to your second top. So you have to watch these bearish shapes because if they make necklines and if they break into smaller time frames, you retrace. But I think you're going to stay pretty locked into a pretty confined range unless the other markets really start pumping up. And you can see this on the Nasdaq. Here's your Wyckoff on the daily time frame. Here's your 200. Bounce off the 200 just like Bitcoin. Got a red alert warning signal again for the spring equinox, and you can see price is moving up. If you look at the daily time frame, you get the money flow coming up. And let's go ahead and get some fibs on this as well. Nasdaq dramatically outperforming. Let's do a fib wave. Let's do it from this projection up here to this double top slash distribution box here in Wyckoff. And you can see you pumped right through your 1272, that 1345. 13.1 is a key number as well from a larger fib wave projection. But 13.4, the 1618, is where I think you could get to here. As the S&P tries to move to 4143 to 4200, you could get up to this 13.4 range. So watch that area, okay? And again, this larger wave projection with the trend-based fib coming here. This is a daily time frame, guys. You can see this. There's your one fib right there, 13,111. And that's where you're at right now. Could hold here, could see some retracement next week and then try to break back out to the upside or end up making some type of double top or some type of situation like that, okay? So key number to watch. I'm not interested here yet because, again, that pivot date's still a little bit too far out. But just watch 13.1, see if it holds this, and then watch the next level up, 13.4. And let's look at Tesla real quick. Tesla, again, we talked about this before, but Tesla is an excellent asset. And at a bare minimum, if you were to retest your lows, that this is Tesla at 204 right now, you'd be coming back down to where whence you struck, which is $100. And you're printing a super clean double top. My entry for me, I went ahead and did a trend-based fib here. 382 at 208. I would like to see this get up as high as possible, obviously. Like a co-equal high would be great, closer to 220. But really, looking at this, you have to watch what happens with the other markets. Remember, the other markets are important. The indices are important. If they're going up, I'm not looking to short Tesla while the markets are rallying, okay? And that pivot date is 2 weeks out, and we have earnings in between now and then as well, which is going to be a lot of fun to see how the market reacts. But these levels worth watching, 208 and up, 208 to 220. Get in that range. You can make decisions for yourself. That's a range that I like for Tesla. And then depending where my entrance is, I would use ATR, but I would definitely want to be higher up, maybe depending where the entrance is. If I got in at 220, I definitely want to be above 235 on Tesla in case it does get a little bit more excitement, euphoria in the market. Looking at gold, guys, to me, I said this before, gold looks like it's just doing this. It looks like it's building a distribution box. And I wouldn't be surprised, because patterns repeat themselves, to get some type of crazy wick like this, on some news or on the market initially dumping to get you back up above 255. Because again, 255 is your key level to watch. You've been up there twice in 2 years, both with fear events in the marketplace, and both times you dropped 15 to 20%. And you're stacking candles here at the one fib at 1959, gold's 1977. Could you get bullish here and move up? Yes, but I told you want to hold 2055. Get your pivot, right? So you get your wave up, hold it as a base and move up. Then I'm bullish on gold. You can buy high and sell higher. I'm not messing with gold here in the in-between range. You could trade it. Obviously in smaller time frames and whatnot. It's not my forte of what I like to do with my trading lifestyle, but let's see where gold can go because we keep talking about targets. I'll take this impulse move down to that low, up to that high. Look at that. Your one fib lined up beautifully for support, 1626 on the trend base. So gold, I would have coming down to, let's say, 1520 to 1550 if it repeats the mini crash cycle of the GFC, which is when gold went down 34%, Fibonacci number, gold went down 34%, that would complete that mini cycle if you come down to that. And if for whatever reason, gold just got smashed, and I'm not predicting this number down here, guys, but 1389 would be your 1618. Let's just see what that drawdown would be as well. We went down 34% in the GFC. Banks liquidated the asset. Let's just assume this high stays in place. You're looking at a 24% down move. Again, well within your trend of these moves that you do when gold sells off. Okay. So totally reasonable. 1521, you could have 1550, 1575, but I think you'd sweep this low if you repeat the GFC cycle on the metals. Silver went down 61%, and silver is more volatile, and we have our targets here. And here we go, guys. We just broke the trend line. So silver, again, people that like to trade, just pay attention. 2-year long trend line. Every single time you've gotten above this trend line, you have not been able to hold it, and you've put out some really large trades. Obviously, I gave you this trade here as well, and this was a 13.5 or 20% move. Let's go ahead and look at this really quickly from that high to 20, just about 20%, 19%. What's spot 80 between friends? We'll call it 20%. So silver is pumping back up. I told you I want to see this flip the 786 at 24 spot 27 and hold it. Okay, so that means flip it. So get some resistance somewhere a little bit higher up and hold it. You got to hold the trend line at the very least and not make a shape like a double top and fall back through. But this is all the joys of trading, because what you've done here is you've printed a massive co-equal high double top. You like all my Bob Ross scribbles? You're printing a massive co-equal high double top. So invalidate that double top, hold your support. Be nice to hold it higher up and not have to come all the way back down the trend line. Hold your support, pivot to the upside. More interested in silver above 25, 27 if silver's rising. And to me, guys, that's $1, okay? It's $1 difference of holding it as support. So if the silver bulls are correct, and you're going to $50 silver, $100 silver, gold bulls are correct, you're going to 3,000, 5,000, and I'm not saying they're wrong, I'm not saying they're right. $1 doesn't make a difference to me. It makes a big difference from avoiding this, because if this happens in the metals, just like it did in GFC, I have that silver target based on our geometric pattern at 1642. So that is a big drawdown. Let's just take it from where it is now. Guys, that's a 32, 33% drawdown from where it is. So this could also be a fantastic short opportunity up here if you cannot hold this number 2427 for support and hold that trend line for support and pivot to the upside. All right, guys, that'll do it for this video. Man, I thought I was going to go a little bit quicker, but I showed you some new information at least. Next video, I'll probably put out Sunday or Monday, so look for that. Definitely like, subscribe, message Lee with any questions about joining, about the exchanges, about coming to our free Discord to hang out with everybody, guys. I hope you guys have a fantastic weekend. Talk to you guys soon. Take care, everybody.